Welcome guys back to my channel. Today I'm back again with another powerful strategy that we can use to scalp the boom and crash market. So if you wanna make $10, $50, $100 and even $200, then you need to watch this video. I'm not overhyping that you can actually make $50, $100 or $200 within a week. I'm not overhyping. I'm gonna be showing the powerful strategy that you can use to actualize this your daily or weekly targets. As a matter of fact, making $100 or $200 within a week is very much possible with a $10 account. All you need to do is just to apply your risk management and apply your price action. Right? Apply your price action, and don't just apply price action. Apply institutional price action. There's what we call institutional price action. There's what we call normal price action. So we call it institutional price action in the sense that the financial industry, your central banks, your banks, or even large prop firms, the way they trade is what we call the institutional price action. So you can't compare someone who attended master class and someone who attended PhD class. Obviously their experience is different and they are more sophisticated than each other. So when we talk about institutional price action, we're actually talking at the PhD of trading. That is just the PhD of trading. Once you are able to master institutional trading, then you can trade in line with your banks. You can trade in line with the way your banks trade, your big financial institution trades, right? So that is what we call institutional trading. And when we talk about institutional price action, obviously we are talking about ICT, BTMM, or SMC. SMC is a simplified version of all these strategies. That's why I make it the third ones, right? So if you know BTMM, you are still trading institutional price action, or you know ICT, you are still trading institutional price action. But if you can just take your time and learn SMC, then obviously it's going to be more simplified. With SMC, you can actually use 3 pip stop loss or 2 pip stop loss, and you can have a good risk reward ratio of having like 1:35, 1:20. Right, 1:30. So today I'm going to be sharing with you a powerful strategy that you can actually use in line with your SMC to actually give you that full optimization of making $50, $100, $500, depending on your account size. You can actually flip your $10 to that, right? You can actually flip your $10 to 100, 200, or 500 within a week. All lies to you. You've gotten the tools that you need, but the next thing you need is your personality, which is your risk management. Obviously, if you are with the right tools and you don't know how to use it, definitely you will not be profitable. And so meanwhile, if you are yet to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. So this strategy is a very powerful strategy that you can use to scalp the boomer market for 10 to 20 candles, depending on your account size and depending on the market situation, right? You can actually see that I have my entry here, right, and I have my entry. So these are the two considerations we're actually going to be putting into consideration. So for the purpose of this video, I don't want the video to be too long. I'm actually going to scalping 10 candles, and after 10 candles I'm going to close, and I will give you the setup for it. But before I give you the setup for it, let me give you the confirmation on how to use the strategy, right? So you need to go to your higher time frame, like 5-minute or 15-minute time frame. Obviously you can actually see that on our 15-minute time frame. Now this is actually what we have here. This is what we have on our 15-minute time frame. You can actually see this as our previous lower high, and these are our recent lower low. So obviously we've gotten a break in market structure with this spike up here. So, and this is what I keep telling you, that don't just use any strategy that you can't see your market structure in it. You have to see your market structure in the strategy you are using, in the indicator you are using. Market structure importance cannot be overemphasized. As in, you can't do without market structure if you really want to be profitable in trading. So the ability to understand market structure give you that hedge to flip your $10 account to $100, $200 or $500 account within a week. All lies to you. All lies to you. Right? All lies to you. Your ability to read your price action. And when we talk about price action, the first thing we always talk about is our market structure. Market structure is the fundamental that you cannot overemphasize. It is after you master your market structure that we cannot talk of our other block. Right, we can talk about our order book, we can talk about our imbalance, we can talk about our fair value gap, all lies. But the first and foremost what we always talk about is our market structure. So for those of you that can actually see your market structure from here, obviously you can see that this is our we've already gotten this break in market structure here. Then after this break in market structure, we had this you can see that the price what we had there was actually to this other block here. Right, we have a return to other block. So after we've gotten a return to other block, obviously you will know that okay, now we should expect a retracement. So when I give you a strategy, don't just use the strategy without applying to the trend of the market. The trend of the market matters a lot. It really matters a lot. It matters a lot. It is when you understand the trend of the market, you know where you are. Right, that is where you can actually say, okay, this is where I'm going to, or this is where we are heading to. But you don't know where you are and you don't know where you are coming from. How do you want to go to your next stage? You can't know where to go. So knowing your market structure tells you where you are coming from and where you are currently and where you should be heading to. Right, you can actually see that where I started is that when we have this break in market structure here, we have our lower low here and we have our lower high here. So we had this break in market structure, right? But at the same time, it's still a break in market structure, but it was what we call a return to other block, right? A return to other block, RTO. So once we've gotten that, obviously we know that definitely we've gotten a BMS to the upside down. We should ask for a retracement to the downside, and we can continue the uptrend, or we'll continue the downtrend. All lies to your market structure. Look at what your higher time frame is talking about. It is when you understand your market structure, you know where you are coming from and you know where you are, that you can now use indicator to know where you should be going to, where you are heading to, right? So it's not about just using an indicator or using a strategy when you don't even understand what is actually happening in the market. Right, when you don't understand what is actually happening in the market, right? So that is how it is, right? That is what we call your price action. You can still, we did have a spike, but it's still back to my it's still back to my entry, right? It's still back to my entry. I've taken how many candles? 1, 2, 3, 4, 5, 6, 7. I've taken 7 candles already, and I had a spike, right? No problem. I'm still holding because I know we are still going to go down, right? The stair will still continue, right? So that is it. So you must be able to see your market structure. You must be able to see your market structure in whatever indicator you are using. You must be able to see your market structure is very, very important. It's very, very important, as in it's very, very important, right? So those are the conditions we look at for. So let me show you how we put it into consideration, right? So the first and foremost, how the strategy works. Once you're able to see your market structure, right? Once you're able to see your market structure, first and foremost is that you need to wait for this price to be below this moving average. So once it's below this moving average, you can enter and take your 5 to 20 candles, depending on the market size. Right, 5 to 20 candles. That means you can stay in the market for 25 minutes to 20 minutes. You can stay in the market. You can stay in the market for 5 to 20 minutes without being caught up with spike. Right, just apply your risk management. So the confirmation we look out for is that first thing, the price has to be below this moving average. Right, and meanwhile the strategy works perfectly on boom 1000 and crash 1000. Right, boom 1000 and crash 1000, and the time frame we are using is our M1 and our M15, and our M15 we are actually using it to check for our trend, right? You can use M15 or M5. We are only using it to what? To check for our trend, to know where we are and where we are coming from, right? So that is what we use our M15 and M5. But our M1 is actually going to be used to do what? Our M1, we are going to use it to what? To take our entry and take our 5 to what? To 10 candles, right? So that is what we'll use the time frame for it. And as for the zoom level, we're actually using, as for the zoom level, we are using, this is zoom level 0, right? So we are using zoom level 1, zoom level 2. We are using what? Zoom level 2. That is what we are using. That is the zoom level we are using. Before you start asking me that what's the zoom level, so we will have this, what? The first confirmation is that price has to be at below this moving average on our what? On our main chart. And our indicator window now, price has to be at this now our 90 level. So once price is at this 90 level, you can conveniently take your 5 to what? 10 candles, right? So do your back test very well. This is an example here. Let me show you another example. You can see this is another example here, right? You can have another example here. So price is above what? Is below our moving average and is at what? At our 90 level. You can what? Conveniently enter for your what? For your 5 to 10 candles and you're out. 5 to what? 5 to 10 candles and you're out. This is another example here. You can see. So this is somehow what we had, and I will have that spike. So price is still coming back, right? It's still coming back to give us our what? Our 10 to 10, our 5 to 10 candles, right? That's 18 candles already, right? That's 18 candles, and we'll have your what? We'll have your 20 candles. Right, so you have numerous opportunity in the market. This is another example. You have what? Price close below it and is about what? Is at our 90 level. You enter for your 5 to 10 candles. You have your 20 candles already. So you have your what? You have your 20 candles already, right? You have your 20 candles already and you are out without being caught up with spike. All you need to do is just to follow the rules in the market, and you what? You will be able to flip your what? Your $10 account to what? To $100 or $200 or even $500 within a week, depending on you, right? This is another example. You have 22 candles already and you are out. Right? You have 22 candles and you are out. Right? You have 22 candles and you are out. You have 22 candles and you are out, right? So this is actually another example. There is numerous example of it in the market. You can take as many as up to like 10 trades of this every day on Boom 1000. The reason why I like Boom 1000 is that it's good in scalping. It's actually good in scalping, right? So do your back test very well, and make sure you would like the videos and share with your friends to let them benefit from it. So guys, let me share the settings for you. Right, let me share the settings for you. Right, so anyway, before we share the settings, I don't want the video to be too long. We have 13 minutes already. Let me share the settings while I pause the video, and then we'll wait till we take our 20 candles. So the first indicator we're actually going to be using, click on this F plus. For those of you that are new, click on this F here, right? So you had what? Moving average. So the first moving average you are using, the period is 10, shift is 0, method is exponential, apply to what? Weighted close, HLC/4. Then you can use any style of your choice and any color of your choice. Alright, so once you are done, you click on what? You click on done, and then you click on this F plus again, the one here. Alright, you click on this F plus here, the one here, right? So once you click on it, right, you add your what? The first indicator we use is our relative interest. The period is 100. Apply to what? Apply to close. The style is what? 1 pixel. Then the color of this style has to be the color of your background. You can see my background is white, so I'm actually using white. So if your background is black, then you have to, the color here has to be black. And if your background is blue, the color here has to be what? Has to be blue. Right. So once you are done, you click on. Then we have the levels. The levels is what? 90 and 10. So we'll buy at 90 level and we'll sell at 90 level and we'll buy at what? At 10 level. I'm actually going to be dropping a version 2 of this strategy that you can use, or now you can use it to catch spike. How you can use it to catch spike. Right? I'm going to be dropping a version of 2 of it. right? So that for those of you that actually want to flip your account easily, you can actually flip your account by catching spike. Spike will actually gyrate or speed up your the moment of you what moment of you flipping your account to a meaningful that you can actually have a standard account whereby you can trade conveniently. So guys, so once you are done, you click on what? You click on done, right? You click on done. Then the next one, you click on this F. You click on this F plus here and not this one, because we're actually adding it to our indicator window. So once you click on it, you look, or you add your what? Your moving average. So the moving average now, the period is 1, shift is 0, method is exponential, apply to what? Apply to weighted closed HLC. The style, you can use any color of your choice. You can use any color of your choice. Once you are done, you click on what? You click on done. And so the next one, you had moving average 2, the period is 2, right? You can use any color. You can use, then the color now has to be different from the first one. The color has to be different from the first one. So once you are done, you click on what? You click on done. Right? So the same settings you use from your period, from your moving average, from period 2. Remember, this is period 1, this is period 2. So you have the same settings up to 3, 4, 5, right? So it is on the 6th now, on this 6th, that you now have a different settings for it. So all this one is going to be the same thing, all this one is going to be the same settings. Let me show you. It's going to be the same settings. It's going to be the same settings. So this is, you can see we have the same color. They are going to have the same color. This is the third one, right? This is the first one, they have the same color. And the fifth one, right? And the fifth one, right? So on the fifth one, you now have a different color, which is going to be red. Right? So on the fifth one, you have the same color, different color, which is going to be what? To be red. So the period is 5, method is exponential, apply to what? Weighted close. So once you are done, you click on what? You click on done. Right? You click on what? You click on done. So on the sixth one now, the sixth one is going to have the same different color too. It's going to have different color. It's going to have different color, right? So the sixth, from the sixth one now, from the sixth candle up to the what? Up to the ninth candle, you have the same color. The seventh candle, you can see you have the same color, right? The eighth one, you have the same color. The eighth one, you have the same color, and the ninth one, you have the same color. Then the 10th one is on the 10th one, you now have a different color, which is blue. So once you are done, you click on what? You click on done. And you can actually see we've taken how many candles already. We've taken our 10 candles already. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So we're on the 9th candle. So enter the 10th candle. We enter the 10th candle. So guys, this is how you use the strategy to catch, to scalp the boom and crash market. So this is how you use the strategy to scalp the boom and crash market. You can take your 5 to 10 candles without being caught up with spike, right? Without being caught up with spike. So the risk management there now is that you apply your stop loss. Usually your stop loss should not be more than 2 to 5 pips, depending on your account size. Depending on your account size, it should not be more than that, right? And you target 10 to 20. So this is actually going to be a 1:4. Whichever way you want to do it, you must have 1:4. That means you're actually risking $1. You are risking $1 to get to get $4, right? You are risking $1 to get $4. So we've gotten our 10 candles already, guys. So guys, do your back test very well. You actually enjoy this strategy. Please do well to share with friends. Please share to trading groups, Telegram or WhatsApp, and even on Facebook. For those of you that are on Facebook, and those of you that are actually on Twitter, I'm definitely going to appreciate you. Guys, please do well to share this video with your friends and family. Let them benefit also too from this strategy. As a matter of fact, we just need to be profitable in trading, and you can't be profitable in trading without having the right tools, without having the right strategy to use. So guys, if you actually enjoy this strategy, please do well to hit on the subscribe button and turn on the bell notification so that you can stay updated each time I'm dropping a new content. Please do well to what. And if you have any question, you can actually
check the description, you find my contact there. You can call me if you're on the same region, and you can actually drop a mail for me if you're on different, and you can even chat me up on Telegram, right? I'm going to respond. So guys, do your backtest very well. There are a lot of opportunity in the market. All you need to do is just for you to backtest very well. Don't just come and see the strategy, you just test with one trade. Imagine now, if I have not done my analysis, when I have this spike, I will have easily closed up and say, okay, no, we are not going. But since I've done my analysis, I know where I'm coming from, and I know where I am currently, and I know where I'm going through. Obviously, I should not be afraid when I have this spike here. I shouldn't be afraid when I have this spike. So that is one thing about your price action. If you want to learn about price action, you can actually contact me. I'm going to roll out the process on how you can learn your price action. So guys, please do well to like this video, share and subscribe. See you. So let's keep making our derivative. As a matter of fact, trading should be fun.